Hi, this is Richard Perry. This is my latest webinar that I've been hosting with FX Street. I'm the market analyst here at Hantech Markets, and I'm going to talk to you today about the secrets of support and resistance theory and put into practice what is going on in the markets at the moment. There's obviously a significant amount of volatility happening in these markets, and it'll be interesting to have a look at them. So that's going to be part of my webinar. Just very quickly, I'm going to just show you my disclaimer first of all. The disclaimer is an important thing because I'm going to be talking about live market information, and you just need to have a quick read of that. I will show it back to you again at the end, just in case you didn't get a chance to see it. But yes, so there it all is. Right, anyone who hasn't seen rather a bad picture of me, there it is. In the past, I've basically been a technical analyst for about 13-14 years now. Been a strategist for a couple of years at Hantech Markets, which I find very enjoyable, and I'm looking at forex markets, bullion, which is gold and silver, and also indices as well, such as DAX, FTSE. Yes, there's a lot going on, but in the forex markets, especially at the moment. So I will try and crack on. Just a little bit of an agenda. Going to talk about demand and supply, which is basically the concept of support and resistance in the market. Looking at the concept of old support becoming new resistance, i.e., support breaks, resistance breaks, and how you can then sort of trade around those factors. I'm going to also then look into some live market analysis as well, and live market analysis going to take into some of the forex charts, a little bit of DAX, maybe some FTSE and gold as well, because these are all having some key moves at the moment, especially in light of what's happened today and also with the SNB last week. So lots going on. So I'm going to start off with the theory that we've got going here on support resistance. Okay, so basically, to start off with, support is it is the build-up of demand in the market at a certain price. It is basically the price level at which demand is thought to be strong enough to prevent the price from declining any further. As the price falls towards support and gets cheaper, the buyers obviously become more and more inclined to buy, and subsequently the sellers also become less inclined to sell. Now, the support is the level at which the demand to buy exceeds the supply of sellers. Now, and that is where the price comes in, and the price starts. Sorry, the buyers come in, and the price starts to push higher again. So that is where the support happens, and resistance is the opposite concept. It's the point at which the selling pressure overtakes the buyers, and as the price has been rising, and then the price starts to fall away, leaving a peak in the price. So it is effectively the graphical illustration of the concept of demand and supply in the market, which is why it's such a fundamental concept in technical analysis. Now, obviously, what happens when we get support and resistance breaches? Now, the breach of support and resistance is the confirmation of a change of expectations by the market, basically. In the instance of support, a decline below support indicates a new willingness to sell, and either that or a lack of incentive for the buyers to buy. Now, in a breach of support, it denotes that the sellers have basically got and become more reinvigorated, and there is a reduced expectations, a reduction of expectations and a willingness to sell at lower prices. This might be due to an increased fear of a series of stop losses being triggered on long positions, or just a desire for more shorting opportunities. Or I suppose theoretically it would also come as the buying pressure just simply dries up and the sellers basically are just gaining the ascendancy at a level at which the buyers had been previously returning time and time again. Maybe the buying pressure has subsequently just dried up and the sellers can just break through that key level of support. Now, obviously, the concept of breaking through resistance is a similar thing, but from the other way. Move above resistance effectively just shows a new willingness or lack of incentive, willingness to buy or a lack of incentive to sell. And the resistance subsequently then breaks, and we see new highs indicating the buyers have increased their expectations and they're willing to buy at even higher prices. Furthermore, I suppose if you look at it on the other side, the sellers are then subsequently less willing to sell because they've had a change of expectations. I suppose you could look at it through the eyes of a change of a bit of news flow that has changed the market's expectations, and subsequently the sellers are less inclined to sell at that old price that they had done previously. In an ideal world, this would come along with increased volume. Now, what the big factor that I want to talk about today, the key, I think, the trading way you can use support and resistance is the whole concept of old support becomes new resistance and old resistance becomes new support. Now, this is the graphical if I can even speak, the graphical illustration of a break of resistance, and the old resistance subsequently becomes the new level of support, as in the new level of expectations of a higher price. So what I'm going to do is quickly show you, because this is all pointless without really showing you on the charts. Now, okay, fine. This is dollar yen. This is a chart I've got up, which throughout the majority of 2014 or the middle of 2014, it basically traded sideways. And what I saw throughout all this time was this sequence of support and resistance that came in. Now, we originally broke down on a move below the 102.80. We had a strong rally up through the back end of 2013. Then we broke down through to 102.80. And it's very interesting that 102.80 level became a consistent turning point for dollar yen in the subsequent months on numerous occasions. Here is actually an instance where you had a break up through 102.80, and then it subsequently became a basis of support briefly, and then when you sort of saw the breakdown, it then once more came the basis of resistance again. Now, interesting also, we had a floor in place on early February. 100.74 was that floor, and it was interesting because that got tested again back in May. But just look at the number of times that 102.80 actually got tested all throughout 2014. Now, the thing that you need to sort of not get too caught or not get too hung up about is the fact that in support and resistance, you don't need to trade to the pip. Basically, you get volatility in markets. You also get different brokers providing different prices, and just don't get too bogged down in doing it in sort of thinking that support and resistance will be to the pip. It's basically just the consideration of a support area, and I think that is sort of the important thing to really take from this, is that you use it as a support area, because basically because there's so many different levels that traders use, and that subsequently means that support area is the level it plays at. Now, 102.80 just was the support area on so many occasions through the middle of 2014, and subsequently, look, interesting as well, the whole concept of breakouts as well, because this is on a bar chart, and I'm hoping you can see it as clearly as I can. But the fact is that when you start to get a close through the resistance, is when you start to get the price moving away from it. This is what happened in the middle of April. Although we did subsequently get a return back into the support band, interesting that subsequently, even though this instance here, and these four trading days here, we never got another close above 102.80. You always had they were intraday moves, they weren't closing moves. And I think that is an important concept to also grasp, is the fact that the closing level of a market is an important confirmation or rejection of a level of support and resistance. Now, throughout 2014, dollar yen, again, as I said, didn't close above 102.80 all the way until this instance here in August. And that actually subsequently saw the eventual real breakout on dollar yen. And it subsequently went a long way after that. Now, this is the interesting other point, because you've got here this December 2013 low, sorry, this December 2013 high of 105.44. That, I've got a horizontal line here to mark that, and it's interesting because this subsequently saw the return to that support. You actually got an exact low of 105.18, but that, you'd certainly say that on a daily chart basis, that is an excellent basis of support. And then subsequently used that support, and bang, it went again. Really strong move on dollar yen. So it's basically, you need to think about the psychology of it. It's just to sort of bring it back to a bit of a theory. You've basically bought at a subsequent price. This is looking at the concept of old support becomes new resistance. So back here, you sort of bought at a price level, and then subsequently you've got to think about the fact that if you say, for example, bought at 100, and again theory, brought at 100, and you've seen 100 support broken, and the price falls below that 100, you are still long at 100, and you're still holding on to that, and you see a move back towards 90, and you're thinking, well, the psychology being, if I can get out at 100, then I think that's a pretty good deal. I can take my chips off the table. I've not lost anything, and I can just live to fight another day. Now, if you see the price rallying from 90 to 100, the psychology being, are you going to get out? Well, a lot of traders do. So subsequently, you see that the overhead supply at 100 of the buyers that had bought at 100 previously is now quite strong, and subsequently the price starts to fall away because there's a build-up of sellers willing to take their money off the table. So subsequently, the price starts to fall away again. So there you go. So that's basically the whole concept of old support becoming new resistance, and obviously we've got the opposite of that as well. So here we go again. This is on cable. Actually, this is across quite a long stretch. Actually, September 2012. Look at these two levels: $1.62.70 to $1.63.10. So 40 pips worth of resistance there. We saw these two highs here. Okay, you just breached to a little bit to the upside, but still you'd be arguing that is a basis of resistance here between that sort of 40 pip band there, because they're consistent highs actually being hit all through this period in that range. Two occasions, so through September and then December and January. And then look at this. I've got the horizontal lines here across into the next year. You see the resistance coming in September and October, and then suddenly you start to break out. You start to see in November the price confirming the breakout, which is where you start to see closes above the support, above the resistance. So zoom in. And you start to see this band of resistance becoming the basis of support through December and January and into February, and that would suggest that the old resistance has become new support, and cable starts to move away from there. So very interesting on the cable there that worked very well. Okay, so what sort of, I suppose the question really to ask is, what sort of supports and resistances do you use, and how can you use them? Basically, you can't really, in my opinion, as I said, use support and resistance to the tick, because, as I said earlier, I think it's is unrealistic that markets work that way. They don't work to the tick. So just make sure you you sort of get that out of your heads. In terms of the levels you can do, I like to use key market turning points. Certainly key levels on the daily chart, key turning points like big highs, big lows would be the basis of support and resistance, and you'd be looking out for, I think, strong candlesticks also to give you confirmation of these levels. Now, if I see if I put this onto candlesticks, how that subsequently changes things. No, wrong one. There you go. Okay. See all these candlesticks. You never. That was the only one there through that period. Where you got 62, 61 as your last candle. You never really got the strong candlestick breaking through that support. You had a few tails, as I said, intraday moves that are rejected are these tails. So that's another way you can use support and resistance, is using the candle bodies and the candle tails. The candle tails are often, especially when they're long, candle tails can often be indications of a rejection of a support or resistance, and it certainly seemed to be the case in December and January and February here. So that's it certainly did work then, and yes, so that did work on cable. Okay, so let's look at euro dollar. Okay, this is another instance on euro. Now, what I've got here, I've got euro dollar actually across all 2014, but I'm going to use a scrolling basis to show you exactly what happened on euro dollar through to 2014. Okay, so we've got this. Certainly there is an area of support at 138.40, and what do we see? We see time and again this being used. Okay, you had a slight sort of intraday move, attempted breakout, but that was actually on a spike, and it came quite quickly back into the resistance. So 38.40 certainly was on numerous occasions, so on the 20th and then again on the 25th. So we started to see that, and here we go. Here's actually, I haven't actually highlighted it yet, but we started to see that being used as that actually got used as the breakout support as well. So that old resistance became new support here, and subsequently you did get a few pips to the upside of another 60 ticks. Okay, so let's just move this on because there's a lot going on this chart. Now, what I've got here is a big pivot level of support. Now, I've got a couple of lines here, which is pivot level between 35.75 and 35.85. So 10 pips worth of support. And what you see here, time and time again, through May and into June, that level of support. Obviously, we did have this big spiky day. I don't know what happened there. I'm presuming. No, that was ECB day. Okay, so fine. That was ECB day, if I remember rightly. But anyway, so you had 10 pips of support. So that support coming at 35.85. Subsequently, you see a breakdown on this day on the 10th, and then it becomes the basis of resistance once again. So old support becomes new resistance. 35.75 consistently hit. Then we started to trade above it, used slightly as the basis of support. But then on this correction, okay, you slightly went below there, but by about 10 pips, 5 to 10 pips. But still, the basis of support coming in between 35.75 and 35.85. And all through the next few days, again, used as the basis of support for the rallies again and again. Again on the 7th here, the basis of support for the rally. But then you see this breakdown on the 15th, and it's a confirmed breakdown because you start to see hourly closes below, and then you suddenly see a consolidation around this resistance because the old support would become new resistance. So once you've broken that, it turns around, and you start to see in late on in that on the 15th, it starts to become the basis of resistance, and you break down again. And that was that level worked on numerous times across about 3 months. And yes, that was very strong. Now, okay, fine. So, unfortunately, no, it hasn't. I thought it'd frozen there. Okay, so what else have we got here? Okay, more recently, September. Basis of resistance there, time and time again throughout a couple of weeks' worth. We see a support, and that support is fairly reasonable. It's not too bad, but then we see another breakdown. But interesting that support 128.40 becomes the basis of resistance subsequently in October on these rallies here, rejected on numerous times across October. Okay, so I've got a base of support in here, and that level is 25.80. And what do we see? Coming in again, being used again as the basis of resistance on numerous occasions in November. So this level that we actually posted through September and early October actually comes back and is used once again throughout November as the basis of resistance on euro dollar. Very interesting that is. So what are we seeing at the oh, there's another one. Even late December, mid-late December, you could argue that that peak of 25.70, 10 pips below 25.80. So yeah, not certainly looks to have been a basis of resistance. Okay, so you got this 22.45 level that was posted in December, and yes, once again, that level 22.45 becomes your basis of resistance. 1880, where have I got that from? Oh, I don't know. Okay, it might be no, okay, fine. Anyway, so I think you can get the idea that old support becomes new resistance, and it happens. And if you keep these levels on your charts, they will come back and be used on numerous occasions in the future. It just happens time and time again. It happens so often, and you just need to just keep putting these levels on your charts, because the key levels will turn up again in the future as turning points for your price levels. And yes, it's uncanny how often it happens. Okay, so what other bases of support and resistance? You can have Fibonacci levels. Anyone who's looked at Fibonacci's will know that Fibonacci supports and resistance lines do work. This is 38.2. This is on dollar yen. This is a retracement of that 105.18 to 121.84 run higher, and it hit that 38.2% almost to the pip. So just 8 pips away from that 38.2 level. And the 23.6 level also was used on numerous occasions here. You could say the consolidation around here as well that I didn't really draw this, although this low in January as well. And again, you could argue a consolidation here. It's just trading around it at the moment. I think dollar yen. I'll talk about dollar yen in a bit, but I think dollar yen is sort of in a bit of an uncertain phase at the moment. Doesn't really know what it's doing. Also, you can have Fibonacci projections. Here we've got dollar yen going back a little bit further, but a projection of a big bull run here from October to December, so a 3-month bull run. If you project that from 174, which is basically the range that I was talking about earlier on dollar yen. Interesting that these Fibonacci levels work on time and time again on this chart. So I will do that. Look how often you see these Fibonacci levels, 38.2% hit to the pip, 1 in 414, 3 pips away. Okay, that's a little bit. Then you've got in May, you've got the 23.6% fib level coming in again, 1, 2, 3 times. Consolidation around 38.2. 100% fib around this bull run high. And then you get the retracement back to the 50% projection level on pretty much on that line, 1 in 518 the actual 50% level is 105.19. So you can see that these Fibonacci levels do work, and I love Dolly N for it, because Dolly N is an excellent exponent of Fibonacci's, actually, and that is also something you could have a look at, because it does tend to work an awful lot on Dolly N Fibonacci levels. So yeah, there is an awful lot you can use with Fibonacci's. The other concepts of support and resistance is a trend lines, which I believe I'm going to do a trend line webinar next time, if anyone wants to listen to that, and also round numbers as well. But round numbers is basically just where you've pretty much had a breakout, and you start to think about next levels of resistance, and you start thinking about sort of round number resistances. But it's not an exact science in any way at all, but it does tend to happen sometimes that round number resistances, round number supports do work. But generally, I would say, obviously, the whole horizontal supports of price and also Fibonacci do work very well. Okay, so let's look at where we've got at the moment. This is the current outlook of support and resistance on the FX charts. Now, let me start with cable, because cable I see is trading sideways. It's basically been in this sideways band. Now, what I'm going to do very quickly is just run through the support and resistances, and then I'll drag in a few other indicators, because I know a lot of you do look at them. I'm going to do that, or I could just do it straight on here. Let me just do it straight on here. Why not? Okay, so let's start on euro. Now, euro, interesting, because we have actually had, since I've started this webinar, we have had a breakdown. Yeah, 104.59. So 114.59. So that level has now been broken. We've just had ECB day, Mario Draghi announcing 60 billion euros worth of monthly asset purchases, and the market's obviously taken that as a positive. So that's euro down, and we've broken back below that 114.60 level. So interesting that we haven't had a decisive break yet. I would mention that we haven't had a decisive break, but we have. This is on the daily chart, and the reason is because here we go. How far back have we got to go? Ridiculous. As you can see, I've got this big long horizontal line here on as support. Also, we've broken through that low there, which was 1640. That's gone. And if you were to ask me to do Fibonacci levels, I would come to you and say there's a Fibonacci retracement of this massive 2000 to 2008 bull run. That there's a Fibonacci retracement level that comes in at one spot 11 figure area. So that's where I think euro could be coming back to ultimately. But it certainly looks at the moment like it's breaking down once again. These momentum indicators across the board are, well, they're pretty weak and pretty terrible, but nothing really positive to talk about on that. So if we look at support and resistance levels, we've already got this one in at 1750, which was this old range low. So we can now start to draw in. This never works very well, but I'll give it a go. Not too bad. Okay, so we can now start to think about this level, which is 1650 being the next key level of resistance. So it sort of links in around these highs here. Let me just do it. Come on, let's just do it with a horizontal. Makes me look a little bit better for an analyst. Okay, so yeah, horizontal there. So 1650 area. And around 1650, you can see you get encapsulate all these highs and also the rebound high here, 1646. So again, around 1646. So a couple of highs at 1646. You could even get a bit more accurate at 1646 if you wanted to. But look at this. So that was yesterday. Now, I'll tell you what happened yesterday. That was when the market started to hear rumours of bond purchases from the ECB. The rumour was 50 billion. Obviously, turned out to be 60. So it was more than better than, or what's the term? More than expected. But look at this. We didn't have an hourly close above that 1650 level. So you'd say that the move was rejected, and certainly was rejected, and rejected again today. So you've got all this resistance coming in. Okay, I've had a question about diagonal support and resistance. I'm presuming that you're talking about trend lines. So let's zoom out and see where we're doing on the old trend lines, because obviously trend lines do have a part to play in support resistance, and I talk about that quite a lot. That's not bad as trend lines go. That's not bad at all. So you've got a trend line that's now coming in at that, and although yeah, I don't think you can get really complaining about that. So yeah, you'd say that trend line is now a very strong basis of resistance. It's quite a long way up. It's 1637. It's sort of 170 ticks away from where the euro is currently trading. But it certainly looks like that is a basis of resistance now. You'd also say that all these lows in here, which I'll draw a horizontal line, these lows around 1540 become your basis of resistance as well, because this was an old floor for for 3 days. You had a floor at 1540 on euro, so you'd say that floor is now your new resistance. So again, that's 80 pips above where we are. So 1540 is 80 pips above where we're trading now, 1460. So that's your first real level of resistance on the euro. Okay, let's look at sterling. Okay, I've got a few levels on sterling. Again, this is intraday hourly. Sterling is trading sideways, and I said that because it's done a little bit of an annoying thing today, because it had this nice sequence of lower highs, but then it's broken out. But that breakout, you would argue, again, 152 again. Actually, I know I'm quite happy about that. It's 152, which capped that upside there on the 20th, and it's done it again. Look at that. On that hour, it was to the pip. You had a slight breakout, 11 pips to the upside, but again, no hourly close above. And you've subsequently seen the sell-off back down again. So I still think the bears are in control of cable. I think it's going to break to the downside. I cannot see that cable's going to be breaking higher. And again, this is an aside and using a little bit of technicals that we haven't talked about today. But what I've been talking about in my own daily analysis is the RSI, using the RSI, classic signals on the RSI, buying the RSI at 30, selling at 70. And again, yes, today it's worked bang on, and I'm really happy about that, because I've been talking about this for the last few days now. Every time it gets to 70, you can sell it. Every time it gets towards 30, you can buy it. And you can do really short-term intraday trades on cable using this hourly technique. It's not going to work forever. Just bear that in mind. It's not going to work forever, but it is working at the moment. Last few days, it's worked really well, as cable has continued to be very choppy, trading sideways. No real, look at the moving averages, basically all flat. No real movement on cable at all in the last few days. And I think that's interesting. Let's look on a daily. Yeah, you've still, it is. I mean, I'm just going to extend that downtrend line there on cable. it's still quite a long way up. So you've got this consolidation. I think that's probably just get unwinding back to this downtrend, and subsequently I think it's going to go lower. So I think I think its cable is going to be working to the downside. It has annoyed me slightly that it did break that sequence of lower highs. But having said that, you've just come in strongly once again at 152. Right, that's freed up. Japanese yen, here we go. I think Japanese yen is working on an intraday basis, actually working pretty well. Daily basis, it's basically in a big sideways range. Intraday, though, we've got this nice reversal pattern, and you've got the support of this falling, so it's slightly down sloping neckline. And again, 117.20. What was the low? 117.16. And today we've had a low of 117.24. So we're still holding on to this positive outlook, I think, on an intraday basis, because we've had this intraday reversal. You're also above the trend line of this. You broke this trend line sequence of lower highs a couple of days ago, and it continues to sort of trade around that. I think it's taking a while to get going on dollar yen, but I think ultimately dollar yen will start to push to the upside. At the moment, it is sort of holding this support of 17.20. Now, I think there's a reason why I've got 17.20 there. Yeah, look at that. Okay, so 17.20 kilo here. Not too far away from being a kilo here. 17.40, okay, just slightly off. You could argue that it was a basis of resistance as well, although again, I think 17.40 was probably, say, maybe 20 pips worth between 17.20 and 17.40 here. Let me get the crosshair on there, you maybe see a little bit better. So resistance around there. Just zoom in. Resistance around there. So between 17.20 and 17.40. But then it came all the way back. Oh, Richard. Okay, came all the way back. And we're now using 117.20 again as the basis of support. Now, that's live. That is not me looking at historics. That is live. And that is interesting because 17.20 clearly is a key near-term level on dollar yen. Again, I mean, even if you look here very closely, this hour here, 17.17 turn. This is a basis of, once you broke through, is a basis of support, very near term, pushed higher. This actually became again a basis of resistance on the way back up. Again, basis of resistance, 17.20. And we're now being used. It's now being used once again as a basis of support. Okay, I had a question. Do you consider fundamentals? Yes, of course I do. You can't not consider fundamentals, I think, in this market. So much going on, so much news flow, so much changes of central bank outlooks and monetary policy, that I think if you avoid fundamentals, you are putting yourself at a big disadvantage. I think what I like to do is I like to have a fundamental view and sort of see that as the macro view, and then subsequently the technicals should theoretically, in my opinion anyway, the technicals should mold around that view on the longer term basis. Longer term fundamentals, short term technicals. That is how I trade the markets. I use so for nearer term outlooks, you've got to use technicals in my opinion, but for the big macro trends, the big picture moves, for example, euro changing of the outlook on of the ECB in May, saw the euro peak out at 139.92. Subsequently, we're now back at $1.16, $1.15. So yeah, it has a big influence on the charts, and I think to ignore that or to avoid it you do that in my opinion, at your peril. Okay, so dollar yen, little bit unsure at the moment. 117.20 is your key support near term. Had a test of that in the last couple of hours, and you've held on to it. 30 pips above it, but still, I think that could well come under a little bit of pressure. And if you start to see closes or consistent closes below there, I think we could see my little base pattern, which I've sort of drawn in here, come under some pressure to the downside, which I would be a little bit upset about, but we'll see how that goes. Anyway, okay, gold. By the way, if anyone wants me to look at any other forex majors, I know a lot of you like to look at Aussie and Kiwi. In fact, I'll do Aussie after this because I know that is Aussie and Kiwi, Aussie and gold do have their links, so it'll be interesting to see how the Aussie's doing. Right, gold. Look at that. I love this because we've had a lovely, really good stepped rally on gold. Crikey, we hit a low on gold 1168.25. We're now up at over $1,300, so that's 10%. Good Lord, more than 10% in that time. And what we see is a consistent use of old support becomes new resistance. Old resistance becomes new support on the way up. So you break through on the 6th of Jan here, break out, and that becomes your level of support. Again, didn't come exactly, but still you had a breakout and then consolidation. Another breakout and consolidation. This is what we've got here going on, and I've been talking about this morning. You've got a band of $10 support, $10 worth of support, 1271.85 up to 1281.50. So basically $10 of support. And what we have seen is that's come in and basically nailed it. This low that we saw today. So consolidation and gone nicely to the upside. Excellent, excellent work. Now, the other thing is RSI. I know, again, this is sort of not really what we talked about today, but I'm going to talk about it anyway. RSI, lovely basis of support on the RSI in the mid-30s, time and time again. In this bull run that we've had, the RSI has come in and been used as support. So this is a classic, in my opinion. This is a classic bull run on gold at the moment, where you see the RSI being lows on the RSI around in the sort of mid 30s to 40, and the bull and the strong runs go into overbought territory, and that is, in my opinion, a classic bull run. So the RSI is working a treat on gold at the moment on your hourly chart, and we've also just had a buy signal on your MACD lines. Stochastics are also rising strongly, so this gold chart is working very, very well. Now, on your oh no, what's gone on there? That's just rubbish. Okay, let's try that again. Right. This is gold on your medium to longer term view. Now, trend lines, I know it's a bit premature, but we've broken out this big long-term trend line. It's a just massively decisive move. This gold chart, I think the gold bulls are going to be getting very excited about this one, because we're also now coming up towards the 1322.60 level. And if we can break out above 1345, which is the July 2014 high, then the way is clearly open towards 1392, which is the March high. But certainly I think that is just another confirmation of this turnaround, this big turnaround that we've seen in gold. Anyone who does pattern analysis, let me just draw in a head and shoulders reversal. Left hand shoulder, big head, right hand shoulder, higher. Okay, so how do you do that? You measure that from the bottom, which is 1132, projected higher from that neckline at 1240, around that. Actually do it from here. Sorry, 1132. So it's about 105 It's about 105, 106 of upside projection from your breakout level, which is 1228. So not a million miles off 1330 odd is your target. So 1302 at the moment. So you've got another 30 or so dollars to the upside. That would certainly suggest that we are testing these two highs, I think, on this chart, these August and July highs. So very strong move on this gold. Now, in terms of support and resistance, you've got that on the intraday chart very nicely. You've got this nice band of $10 worth of support. If you started to lose that as well, I can't believe I even forgot. Moving averages are also a concept of support and resistance as well. A lot of traders do use them. I haven't talked about moving averages today, but just take it from me that moving averages also do have a part to play in support and resistance, and this is the 89-hour moving average, used on numerous occasions, and again today has been used as the basis of support and resistance. Okie dokie. Just I'm going to just read a question, so just give me one sec. Okie dokie. You want me to do fib on cable? I can do that. Just let me finish on gold, and I'll go back to that then. So yes, we've got strong move on the upside on gold, and again the basis of the 89-hour. 89 S or E? Simple or exponential? That is simple. I don't like to complicate technicals too much. The reason I use 21.55.89 on the hourly chart, and to be honest, that should be 144, because they're Fibonacci levels. So if that answers a question, or the other question I suppose is simple or exponential. I use simple moving averages purely because I have done. There's no other reason behind it. It is each to their own, and I've always used simple moving averages. Other people can use exponential. It is up to you. It's whatever you deem fit. Right, GBP USD. Okay, so we're going to use fib. So to do that, let's do it on the daily, considering we're talking about weeks ahead, aren't we? Okay, so where would you do your fib on this cable chart? Well, my first one I could do is this recent breakdown. You could argue, this is not going to work, so I'm going to do it on, sorry to change charts a lot. Let's do it on this. Okay, so let's say that we've got this breakdown consolidation. So if that consolidation went again, you'd go and put your Fibonacci projection. So you started with a breakdown there. It's around about like that. Okie dokie. So then you go, see where we're looking. Okay, fine. So your downside projections on your initial fib move. This is a near-term fib. I mean, there are obviously others you can use, but here we go. This is an initial one. So your rough calculations are next target 49.78. So you'd say 50 pretty much is a key level. Yeah. Okay. So interesting that 38.2 is already been used as a basis of support, and the theory being once you break through a fib level, you should be going to the next fib level. So the next one is 49.80, and then 49 pretty much 49.10. 100% is 46.87. So it certainly looks like cable, if it starts to break down, if it starts to breach through that 50.32 support, it looks like cable is going to be going probably, I would say, at least towards 49 figure, and then probably this 100%, which is 46.87. So yes, that is on cable. Okay, so I said I was going to do Aussie. This is a chart, isn't it? Because this is an annoying little so-and-so. Because you had this bullish divergence on the RSI. It was a very decent signal, actually, that ultimately saw a nice bit of support come in. Although you've had a sell-off and a retreat back towards this key support, 80.31. Now let's show that on the intraday. Oh, computer. Why do you do this to me? Anyway, please. Anyway, so it certainly looks like, here we go, okay. AUD equals, right, okay, so this is Aussie. Now I have got a few lines in here. Interesting. Yeah, they're not, I think these are sort of old ones. So you'd probably say your resistance here on Aussie, you'd be up in this sort of level here, wouldn't you, for the key level, 82.80, that sort of area. Also interesting, if I zoom in slightly here, you've got this band of resistance that comes in. There, which you'd imagine would start to think about capping gains. It's a bit messy, I have to say, this intraday chart. The big major thing I suppose you take from it is these key levels here, which so far are intact. And if they stay intact around that 80.40 level, a low today of 80.53, so not too far off that. If they stay intact, you'd say that that's okay. Bulls are still trading in a range, but this range, I think, is sort of coming under a bit of pressure now. Certainly on the daily chart, we've sort of rolled over a bit. Just go back to that daily chart. Just rolled over a couple of dodgy candlesticks in a row. So if you start to see the MACD lines turning lower, stochastics have already turned lower. It just looks like the pressure is beginning to grow, and maybe this consolidation is in a little bit of trouble. So maybe you'd start to think about using this sort of blue line of resistance, which is at 81.60, as maybe where you start to think about potential shorting opportunities. Yeah, it's a bit of a messy near-term chart, I think, this one. Kiwi. Now, I did Kiwi today because we've had a massive breakdown Kiwi in the last couple of days. Now the big move has come. This is again hourly. You had a pretty strong range on Kiwi, I have to say, and that range high came in consistently around that 78.50 level. And we've had this breakdown, and that breakdown came on the back of the change in monetary policy by the Canadian Central Bank. They cut interest rates, commodity currency. Kiwi's a commodity currency. It's also oil-based, and yes, that subsequently sort of put pressure on the Kiwi to the downside. Theory being, I suppose, that what if the Canadians are doing it? Maybe that sort of gives you a harbinger for perhaps what the Kiwis may have to do too. But certainly it has had an impact. It's not really gone strongly to the upside, to the downside yet. 76.06 is this low that comes in. But you'd say, I think, between 76 figure and I think 76.20 being these sort of lows that you've got here. A couple of lows from a couple of days ago. I'd say that's 20 pips worth of resistance. I think you'd start to think about selling on a bounce back, because it certainly looks now as though the Kiwi is breaking lower. NZD equals, yeah, I mean, if the other thing being, this is the daily chart. You've got all these moving averages which are beginning to roll over again. RSI deteriorated, MACD lines turning down, and also stochastics falling. So a lot going on to the negative there. Okay, I'm sort of mindful that I haven't got too much time left. GDAX-I. Let's look at DAX. Wow, DAX loved it. DAX loved the ECB today. How much is it up? 1.4%, 138, 139. So yeah, DAX was very strong reaction to the ECB, and why not? 60 billion euros worth of quantitative easing, effectively. So yeah, that's going to help the DAX, and certainly that DAX has broken out now, all-time high. Let's zoom out a bit. That's DAX. What a run! What a run! And you'd say, zooming back in, this support around 10,050 is the level. So 1050 up towards 1093 are these sort of breakout levels. So you'd say that's a really good band of support now. You've got between 1050 and 1093, so sort of 40 odd pips worth of support, sort of 40 odd points worth of support on the DAX. And you could even argue, I drew in this symmetrical triangle pattern. You could argue that you go up and it's actually now hit the target. Well, I never. Okay, fine. So that's pretty much now been hit to the upside. So you start thinking about, yeah, that's a very strong move. You could also, okay, let's do a fib level. Okay, just reading another question. Okay, fib level on DAX. Okay, fine. Let's quickly get that going. So .gdax. Right, let's do it. Let's do it. Fib projection. Bear in mind these are rough because I haven't done them exact to point, but you get the impression that I'm trying to give. So 100 is 1,000. Oh God, Lord, 10,950. Look at this, actually interesting. 61.8 consolidation around that level for 2-3 days. Very interesting. Now we've broken decisively through it, and the theory being on Fibonacci is that once you're through one level, you then will rally towards the next. And I mean, why not? Why wouldn't the DAX now go on a massive strong run if the ECB is backing it all the way? Why not? Why can't we see some questions? I don't know. I don't know what's going on. To be honest, I can't help you out with that one. But that sort of takes me to handset markets, really. We are a UK regulated broker. Just very quickly, just a bit of background on what we do. We've got 100% straight through processing execution, competitive spreads. We use MT4 Coronex. What I do is research for Handtech. I write all the daily morning report stuff. I do analysis videos, weekly strategy reports, and that's all on our website, which is at handtechfx.com/market-research. My Twitter handle is @handtechrich, and I'm constantly on there just commenting on stuff. Did a lot of comments on ECB today because it was ECB day. But yeah, so thank you very much for listening today. Thanks as ever for all the comments and questions. I do enjoy these FX Street webinars a lot because we do get a lot of interaction with you guys. So it is all very entertaining. And thank you very much for your participation. And I will speak to you soon. Thank you very much.